Hi, thanks for registering and joining me on this journey. I'm sure it will be a great experience for you. Over the next few videos, I'm sure you will pick up one or two things about how the system actually works. Have a great time. I'll be recording and revealing step-by-step details of four of the what I believe are the most profitable candle reversal systems, and this is what the 5TT candle reversal system is based on. The first one on the out of the four is a tail bar, and what I'll try to do is to break down the tail bar into bullish opportunities and bearish opportunities. Now, the first thing to really point out is, irrespective of the color, a bullish tail bar is a bullish tail bar now, and we will go through the psychology of the pattern. And so you can have on the chart a green bullish tail bar, and you can also have a red bullish tail bar. In the green bullish tail bar, the close is higher than the open, so the close is there, open there. And in the red bullish tail bar, the open is higher than the close. For the tail bar, we'll be looking at the long tail, the short tail, the body, and the entire range of the bar. Now, what is the psychology of this pattern? The psychology of the pattern is a period of typical price volatility. So the tail bar has got to be either higher or the same, similar to the typical average range of the currency pair. And the psychology behind this is sellers earlier on or at some point during the period, say the day, have been able to push price down, to the low of the period. So that's the low of the period, that's the high of the period. So at some point in that day or in that period, price opened around here, and the sellers were able to push price down to this point here. But somehow, and for whatever reason, the sellers could not sustain the downward pressure, and they capitulated, allowing the buyers to push price back up closer to the top of the range. And this is what leads to this long tail around here, which I choose to call the handle. And sometimes you get the tail as well at the top, which I choose to call the short tail point. Now, thinking of that logically, what will I expect to happen the next period if the sellers could not hold or could not sustain a downward move, and the buyers were able to push price in the current period back up? What will I expect to happen in the next period? Logically, I will expect that price will continue to go in the direction that the buyers started to push price. So my expectation is that in the next period, I should be expecting to see a bullish formation bar in that direction. That will be what my expectation will be. For an ideal formation of a bullish tail bar, the bar range must be greater than 65% of the 10-period ATR. So whatever the 10-period ATR is, the signal bar, bullish tail bar in this case, must be at least 65% of the 10-period ATR. The handle, meaning the long tail, must be minimum 2 times the body. This distance here must be minimum 2 times this distance here. And in this case here, this is a perfect formation where we have the handle at least 2 times the size of the body. The tail, which is the short tail here, must be less than 20% of the bar range. Now, why do I say that? Because if you remember, the psychology is that price came down, couldn't sustain the down move, and then got pushed back up with so much pressure. What I don't want to happen as well is that price starts to come back down and close around here. That would have led to having a tail bar that looks like this, where the short tail is kind of long. That is more or less indecision. It's not clear. What I want is to see that price is pushed close to the high of that period. That's what I would expect to happen. So my ideal formation will be that the tail must be less than 20% of the bar range. The other point is that the bullish tail bar should ideally come following a series of bearish bars, short-term bearish move, because that will then effectively signify that the bearish pressure is weakening. So that is what I would expect to see. Typically, sometimes you don't get the 3 bars. It might just be a massive bearish candle, and then following that you get a reaction. That might just be that. But typically what I will ideally want to see is some short-term bearish move. And as well, I will want to see the handle pierce through a support resistance level and then close above it. So in that case, it would have been price break, doesn't close below, and just pushes back up, thereby giving us the tail bar. Now let's look at the entry and trade management techniques of the bullish tail bar. Now for entry, it can either be conservative or aggressive. Now let's pick up the aggressive technique first. This line here is a support stroke resistance level. Remember that that bar, being green in this case, closes there. And then the next bar, my expectation will be, in most cases, to have a bar formed that way. The aggressive technique is once this bar closes, I will buy. Because it's a bullish tail bar, I will open a market order expecting price to push upwards. That is the aggressive technique. For the conservative technique, which is what my bias is, once that bar closes, I place a buy stop order 5 pips above the high signal candle in anticipation that price will push up in that direction. Now, where do I put my stop loss? Again, the aggressive technique will place the stop loss there. But the reality is that does not give price enough room to play. And so my preference would be to place the stop loss here. And in certain cases, depending on whether this support resistance level is a strong one, I can place stop loss 5 pips below the SR line, but typically it's 5 pips below the low of the signal candle. And based on that, if my risk pips is that then influences the trade size based on the risk. And so to manage a trade, I close my trades in 3 patterns. I close 50% of the trade at 25 pips and a further 25% at 50 pips, and then the last 25% is then left to run until either the stop loss gets hit or a manual closure takes place. And whilst that is happening, for trade management, we also trail the stop loss over a distance of about 50 pips. So providing price keeps going up, the stop loss will just keep trailing 25 pips below the current price. And that is how the bullish tail bar is traded. Similar for the bearish tail bar, the only difference is in this case it will be a sell opportunity. So again, irrespective of the fact whether it is a red or green candle, a formation like this will always be represented as the bearish tail bar, where the handle is minimum 2 times the body and it has a very short tail, providing that candle formation is formed. It doesn't matter if it's red or green. So similar to the bullish, the bar range must be 65%, minimum 65% of 10-day period ATR. The handle must be minimum 2.5 times the body. The tail must be less than 20% of the bar range. And the candles that follow, that precede this, will be ideal to have a series bullish trend, get that signal, and I'm looking to do that. And ideally, that should pierce support and resistance level and close below that level. And like the bullish entry, the bearish entry is again similar. Aggressive enters there, conservative enters there. Aggressive stop loss here, conservative stop loss there, and in certain cases 5 pips above the support resistance. Every other part of the technique is the same as with the bullish, where the trade size is determined by the risk in pips, and I sequentially take profits over 3 levels: 50, 25 pips, 50 pips, and the last 25% just any time the market goes against me and hits my stop loss, which I have trailing about 50 pips from the entry. Okay, let's look at some examples of the bullish tail bar on the charts now. And I can see one already, that one on the 31st of March 2015. And so we have the body being, or the handle being more than 2 times the body, and that tail is close, almost close to not fulfilling my ideal tailback requirements. But then, yes, it did fall in. And so, following our rules of entry, conservative, I would have looked at entering around that point, 5 pips below the low of the signal bar, and stop loss being about 5 pips above that. And then typically I go for 1-to-1 on this. There's no point going for more than that. But like I said earlier, I take my profits in sequence. And so first profit would have been taken at about 25 pips. Because this is a high probability trade, I'm not looking for high reward just before I take the trade. What is the probability that I'll hit 25 pips? Very high. And so straight away I have my 25 pips there. 1.26627, 26627, somewhere around there. I would have had my 25 pips. First 50% of the trade closed, and then the next would have been at about 50 pips, which would be somewhere around there. And then the last one I would have left to keep running. The final 25 pips would have had about 150 pips on it against 138. Double signal there. So again, I would have entered around here, and you can just see price fell off. Clearly an absolutely profitable trade. But that's me looking at, this is bearish. I said I was going to look at bullish. This is bearish. So let's look at some other one. Here is an opportunity for a bullish tailback. Handle twice, minimum twice the size of the body. Short tail, again below 20% of the entire range. So the entire range is about 108, and that's 14. 108. 20% of that will be just over 20, and this is 14, so that meets all the rules. And entry around this point, 25 pips up. First exit around here, second exit around here. So with the next bar, I would have taken my profits of 50 pips. So at this point, 75% of my trade would have closed, and stop loss would have moved to 25 pips to this point, and I'd have been taken out completely around here. So profitable trade as well. Very good, very good. Let's see another opportunity, and there's one there. Again, handle more than 2.5 times the body. Tail less than 20% of entire range, and first profit taken here, second profit taken here, stop loss moved to here, and I would have been taken out around, and then stop loss would have moved, so I would have probably been taken out around here in the third trade, third fraction. So that's good. Another pair, NZD USD. That was one opportunity. Again, very clean trade. Entry, 25 pips. Nice trade. 50 pips. Nice trade. Stop loss moved to 25, and then that candle would have taken me out on that trade. But again, rules met, engagement met. Went on with minimum 100 pips trade on that. Nice, very nice long tail, body very small, and this again 25 pips, and the very next candle was just perfect. 25 pips, 50 pips. At this point, stop loss will be trailing and would have been taken out around around there, around that point there. So nice little profit there. AUD USD, I want to show a losing trade. So that would have been an opportunity there. Entry, only got up to 11, only got up to 17 on there, and then price went back down 62 pips and stopped the trade off there. So that would have been a loser. Now let's look at examples of bearish tailbacks. We will start, let's try Euro USD and see where we have an opportunity. Look at that candle there. Handle more than 2.5 times body, tail less than 20% of the entire range. Entry here, 25 pips, 50 pips. Perfect. Stop loss move to 25 around here, and I've been stopped out. So again, easy 100 pips on that. Again, bias is high probability against high reward. Next, very nice one here. These are the sort of setups I love. Again, handle more than 2.5 times the body. Tail obviously less than 20% of the range. Entry 25 pips, 50 pips, and that would have taken me out at 25 pips. So a clean profits. Next, let's try Gbpusd for some clean opportunities. This one there. Entry 25 pips, 50 pips, trailing stop up to this point. I would have been taken out around here. So nice trade. Let's see another one. There is one in the middle of this down move, and so does it meet all the rules? Yes, there is. This is a level of support and resistance. You can see price got there, stopped, pierced down, came back, did not progress, and then broke it, retested, and the retest candle is a bearish long tail and just fell off. Got me the 50 pips and probably taken out. That didn't come up to 25, did it? No. So probably would have been taken out maybe around here. So clean trade, nice clean trade. Pretty nice one as well. Next candle, all the profits taken. Nice. So the opportunities are awash on the charts. There again, nice trade. That would have been a no trade because entry would have been here, and that didn't enter 3 bars after. So no trade. So yes, that's the power of the system. Let's look for another fail. Let's do one win before another fail. That is a clean setup. Entry, price moved back up, close to our exit. A stop loss that would have been around here. Ooh, hearts would have been beaten then, and then fell off again and gave me my complete profit on that bar. So nice trade as well. Let's see if we will find a fail. That would have been a fail. So that's a clean candle there. Yeah, that would have been, if you look at it, that's a level because price hit that point and retraced a bit and then came back. Boom, 1, no entry there. 2, still closed above, and that would have been an entry filled in by this, but then price collapsed and took us out. There are some advanced exit strategy as well that I employ on this, which I could share with us on a later date. See that nice little opportunity there? Just borderlined out, just big, slightly borderline, 2.5 times, and that just fell off. So it does happen everywhere on the chart. That was the support resistance line, and off it goes. A winner. So that's it for the bullish and bearish tailback. It does look like I'm going to make this into more than 2 videos, and that's a bonus for you for registering your interest in getting the auto trader system, 5DT candle reversal system. And so I've just completed the first video for the long tail bar, bullish and bearish, and the next video will be on the doji formation, and then I'll get a third video out for the other 2 candle reversal formations. Thank you for watching, and see you soon.